Good morning, my name is Ryan Littlestone from forexflow.live. Today we're going to talk about that famous currency pair, the pound versus the dollar. As usual, Brexit's in the midst of everything going on at the moment. Can't get away with it, and once again we've had a week where last week everything was looking like it was going towards no deal, and the pound couldn't find a buyer for love nor money. Now what we're looking at still is we're still sitting in a pretty tight range. If we look at the weekly chart, we can see that pretty easily. We're pretty much in this 135, 130 area, fairly wide, 500 pips or so. For all the noise that's going on, we're not breaking outside of those boundaries. So that's what we're looking at now at the moment, and what we're seeing is just a switch between when things are looking bad and when things are looking good. As I explained, on pretty much all last week, things were coming out negative, and we saw the pound suffer because of it, and cable, dropped all the way down into the 132s. What that's been doing is it's been shifting the price risk to the other side. So if things are really looking positive and the pound is shooting up like it is this morning, up into the 134 towards 135, what it does, it makes the bigger price risk to the downside. So if we suddenly get a no deal, if it's confirmed as a no deal, it comes right on top of a positive moment, and then the price is going to absolutely tumble down. So as you can see marked on the chart, this is where we are at the moment. We've got the green zone, which is the sort of area I expect the pound to rally to if we get confirmation of a deal, and that's the key point. It's always about confirmation at the moment. So if you get confirmation of a deal, we're going to run into this green area, which could be up to perhaps 140, depending on where we are at the time. If we're 135, round about that area, then I expect us to see somewhere in the region of 140. Conversely, as I say, that switches the nature of the thing, that if it's a no deal, while we've got this positivity today, then we've got a bigger chance of really hitting the downside and a bigger loss. And that could be, sub 130 all the way down to sort of maybe the mid 120s at the first instance. So what happens? Let's say we get some negative news into today or the rest of the week, and we head back to no deal. We're going to see those zones on the chart switch around. So the bigger zone will then be the green zone because it's going against market expectations. But for what do we do now? It's really tough. At the moment, it's very, very tough to trade the pound, because one day you're looking at the sky's the limit, the next day you can't find a buyer and the pound's dropping. That's very hard to trade it now. For cable, it's very difficult because we've got such big volatility involved here at the moment. So perhaps one thing to look at, that I've been looking at recently, is trading on the options side. Now I've pretty much been sticking to my Brexit trades to euro sterling, because there's just a little less volatility there, and it obviously takes out the USD side of it. But what I've also been looking at is the options. Now I've got a position short euro sterling that I've been sort of my Brexit trade on a deal, which I still believe is going to happen. And I've been hedging that in some out the money options, and what's been happening is that you can quite clearly see that the prices get really cheap on out the money options when the sentiment moves one way or the other. So for example, as sentiment moved down, turned negative last week, we saw the price of calls, the price of puts really dropping and getting much lower. So as you get these big extreme swings, it's worth looking at these out the money options if you have access to a money broker, because they have a cheap play. If you pick up a 200-300 pip out the money option, you may pay 30-40 pips for it, and that's your maximum risk. And if the market swings, suddenly has one of its swings where the news changes, then you're back in the money. You can sell it off or hedge around it, wait for a swing the other way. So really low risk if you want to trade Brexit. But from here on out, as I say, today we're in a positive mood. We're seeing narrow paths to a deal, if you like what the press are saying, what Barnier is saying. So the pound is back up again. We're up towards that 135 zone, but as we know, it can all change in a heartbeat. So in this instance, then you're going to be looking at lower down puts, out the money puts, if you want to catch a potential swing the other way. So as always, lots going on in Brexit, lots going on in the pound, and we wish you best of luck for this week, and good luck with your trading.